So going around, I like to start with these boxes. I use the 5-day ATR quite a bit in my different setups and filters and things. Right now, these ATRs have been sort of contracting. We've gone into a little bit of a summertime trade. We haven't had and don't have a whole lot of data this week, although Fed minutes tomorrow could actually be interesting. But so I start with RTY, currently at a 25-point ATR 5-day, and YM is 373 points. What I do is I go in here on my 15 minutes and I set this yellow box for 25 points to reflect that current 5-day ATR. And then I just like to set it, oops, what did I do? Looks like I changed it here, so 30, 75, 30, 50. Okay. And I just like to set it centered on the Globex session close and kind of have a visual of where the overnight price action has been, how much we've moved, where it might take us. And the visual allows you to just drag the box. So if you think the overnight low is in, you could do that. It gives you a target back up to the high of this range. Or if the overnight high is in, and that's the high of the day, then maybe we trade down into this level here, 30-40, which seems likely given the moves again that we're seeing in the bond markets. Yesterday I was highlighting how the interest rates are continuing to push, and they're going to continue to pressure the Fed. And I don't know, at some point something's got to give. I think a big number, of course, 5% on the 10-year. Well, we're at 4 3/4 now. The 30 years above 5.3 or so on the yield. So it's getting to that point where possibly these things are going to start mattering. So we'll see if the market can rally this morning and close the gap, or if it's going to be a little bit of a gap and go here to the downside. We still need to go down and test that big breakout level. Who knows what will happen? Let's see, I said it was 373. So there's that. And the NQ. Or I mean YM, NQ currently at 353 1/4 for a 5-day ATR. Nice trending action off that overnight high prior to yesterday's session. Nice follow through in the overnight here. I mean, that's a beautiful downtrend. So does it have more room to go, or is that enough of a little correction here? Kind of getting closer to that 50-day again on the NQ. Comes in at 594.5, or with the slope the upslope to it, like tomorrow's projected 50-day comes in at 613 and 3/4. So where did we sell off to? 680.5. So that's pretty close. You know, once we've recaptured, we were down below the 50-day for a little while, and then we recaptured it and got up back through that 30,000 level again. That was, I thought, pretty significant, and I still think that we could be in this bigger sort of upwave in the NQ. So a pullback like this and a retest of the 50, and then if it holds, and also if it doesn't quite get to the 50 and holds and then rallies, that could be a really good thing. But we'll just have to see how the markets respond to these bond yields. And does it, you know, are we shifting back to a time and an age where, you know, they sell bonds and they buy equities, and then that's how you have to combat inflation, is by owning assets. And so, you know, we could still be poised to just kind of be loading up on these super boom tech kind of companies. And obviously there's going to be some winners and losers along the way. But the market's trying to kind of decipher some of that in regards to, like, you know, the software side of the business and the weakness there versus the hardware and the memory and all that. But I guess, yeah, we'll just kind of have to see and see how this all shakes out in terms of, if yields continue to go a lot higher, then this whole thing could just be due for a huge correction. You know, and then the reset that takes us into the next several years of whatever, right? Because we've been in a bull market for so long, we haven't had a recession. I mean, I don't know, maybe we did in 22 or whatever, and obviously COVID, right? But then you have so much spending that came out of that. So let's get on to the ES chart. Currently have a 5-day ATR 55 points. Okay, so I pull up this, and again, these ATR boxes worked beautifully yesterday in YM, ES, CL. All it allows you to do is get a sense for, you know, I told my room yesterday, look, this was sort of a 2-bar reversal here, a rejection of those prior day's highs, you know, and it was sort of an easy one to look at and say, look, if we fulfill the ATR, we're going down to the 75 level. So I was able to catch a short around the 96s and covered around 78. 78.25. I covered on this bar right here. Obviously could have gotten a little more out of it in the afternoon as well, but the point is, these ATRs, they're a mathematical thing, right? So the algos like the math, and it, you know, these ATR boxes can really work well in terms of helping you identify just how far we've moved relative, and then, you know, what kind of additional movement you might get. And especially for your runners, when you have a good trade, use these. Even if you don't use the box concept itself, the visualization of it, you can just use a quick calculation of the ATR to sort of determine some of that for you, right? So right here in the ES, having it set at 55 points, and let's see if I've got it centered right. So yeah, got it centered right here on the Globex session close. But this is what I mean. You can take this and visualize if that overnight high was the high of the day. Look at that, where it sold off to, right? It's almost perfection. So now what we have to ask ourselves coming in is, you know, do we have more juice to this thing? Are we going to have a day where we put in a 2x on the ATR, right? Because it's been contracting. We've had a couple days of 35-point ranges, and you know, it's possible you can now have one that's back into the 100-point range or 120-point range or something like that. So morning, Philly D. So yeah, I'm not sure where we're going to go here this morning, but they've really enjoyed buying these gaps down. So you could just see, you know, the quick, powerful up thrusting move to fill the gap. If there's enough short positioning, that's kind of what they like to do. Let's go back here for the NQ for a second, and you can see if we pull this down again, just to give you a sense. So if that overnight high is the high of the day, we've already met the ATR and exceeded it, right? So that's sometimes can be a sign that this thing will have more juice to the downside. And on the other hand, sometimes it can be a sign that, you know, it's gone far enough and the positioning, you know, sets up for possibly a good thrust to the upside. Last one, CL, currently $2.86 for its 5-day ATR. This was again a perfect one yesterday. Once this move started to happen to the upside here, you know, it's again, you're just theoretically asking yourself, is this the low of the overnight? So I moved the box to that level, and when it moved straight up like this, as it started breaking out, I was saying, look, if this is the overnight low, here's your target. And look at where it basically started running into resistance. It's not usually a coincidence, right? Here was the resistance. It ran some stops, runs out of steam. They start taking some profits and bring it the other way. So again, reminder, that's a new contract we're on, the next contract on the crude. What did I say it was? $2.86. So kind of do it like this, 82. Center it here on the overnight, and then there's the 4 o'clock open, and then here's the NYMEX open on crude was 84.37. So ding, ding, ding. We'll get the rest of our opening prints updated on these charts. So what I like to do is I use these orange lines to basically tell me and show me where that RTH open is. So on the ES, 26.25. On the NQ, 29,690.25. Harder to get that one perfect. There it is. YM opening 53, looks like 449. And Russell opened 30.48, 30. All right, now I can update these. Look across the board here. So we're getting a little initial buying thrust. Sometimes some of the best first setups in the morning are this sort of retest or touch of the bigger time frame, the 15-minute moving average. So we just got that and everything here, and it's rejecting so far. And that could be a tell that this could be some pretty serious profit taking this morning. Let's see what happens if the NQ can actually give us a real touch of that 50-day. Like I said, I have it coming in at 594.5. But with tomorrow's projected 50-day, you know, including the slope, it comes in around 614. And that's a tricky thing, right? Because the 50-day on the ES comes in quite a lot lower. Tomorrow's projected 50-day for the ES is 75.58. 75 handle, right? Bigger deal if we were to drop quickly to that. That'd be quite a big move in today's session. But it's certainly possible with how these bonds have traded. You know, I've talked about for a long time, I don't think that the volatility in these bond markets is healthy at all. And that's something that really I've been paying attention to. And it just does not set up well. Like, we've kind of been on these face rippers for a long time, and now people forget how ugly things can get when they turn. And also, it's like you have a whole bunch of new players in the market that haven't been through some of that stuff. You know, a lot of people, when you have big bull markets, a lot of people get involved and they become traders, you know, and then they haven't really experienced what that can be like the other way. So I don't know. See how it goes, but I have a hard time thinking that Main Street can overcome this stuff without some kind of recovery as well in terms of the housing market. And that doesn't really happen without lower rates, I don't think. So now another thing that you could see in that world is if people start to think rates are going a lot higher, then we could see a little bit of a big kind of, I don't know, like some weird data that comes through showing a big thrust of, you know, almost like inflationary pressure buying, or sort of a last gasp of people that really want to do something in the housing market or construction world, that they want to do it before prices or yields, interest rates continue to go higher, right? So that's what inflationary pressures do, is they cause people to buy and make decisions today because they're scared that their dollar isn't going to do as much tomorrow, right? So then it it keeps that cycle going, and usually it ends badly. But again, we'll see that the chart is intact, and if that's what you see, then you should start really seeing this NQ trade take off again, right? And it doesn't bother me too much if we retest the 50 here, but it really needs to hold, right? The worry I have is that these tech names are over leveraged, and if interest rates go too high and reach some kind of tipping point, then what kind of, credit risk is there in the market there? So quick glance across the board, advanced declines opened 100 or so, traded up slightly, and are now minus 280. We have another big drop right out of the gate in Meta, down almost 3%. Nvidia, of course, needed to retest some of that thrust that it had. It's a pretty good red across the board, but you are seeing some buying coming in on Microsoft, Nvidia, Tesla. And again, some rotational stuff and some buying, some green in the health industry, Exxon, Chevron. Let's see, I guess we ought to take a look at, I can't remember, was Home Depot this morning? That'd be something to watch. We've got Lowe's coming out and Target. So these are going to be important things to kind of take a look at as they give a read on the consumer. Let's see. I think Home Depot was this morning. So it's trading off a little bit, but not too badly. I mean, these stocks are pretty beat up already, so they may not react terribly to anything. They may just have the opportunity now to kind of get all the bad news out. Just reading a little post there from Rev. Good morning, Rev. Not sure if you're in the pit room this morning, but so this is our pretty, what it's been like lately is you get some choppy whippiness here in the morning. I'm not anxious at all to get jumped into anything right now, trade wise. But my basic sort of parameters are, if you're above the open and the moving averages are sloping upwards, you want to be looking for longs. If you're below, you want to be looking for shorts. It's sort of try to keep it simple like that so that I can remind myself always throughout the day, hey, you're not, if I'm trading poorly and I'm not aligning myself with my business plan and my trading plan, my structure, what are you doing? Right? So you can have your plan very specifically laid out. Like Manny and David, some of you guys do. And then you can also have your plan just here's how I like to trade. These are the setups. But wait for the market to really tell you, you know, if there's a bias for the day, right? Because sometimes I feel like if you get too happens more, I guess, on the short side. I get too pessimistic, leaning too much to the short side, and then you know you can not only get in trouble fading something when it's a strong upside move, but also what's sort of the more painful side to that, or it can be sort of a doubly painful side, is you go back and look at the price action and you're like, yeah, not only was I fading it and losing money, but I was missing really good opportunities on the long side. So I just like to let things shake out a little and then see if I can kind of um, find a day, a couple days, 3, 4, 5 days a month where the trading is obvious in the sense that I can feel very confident and comfortable in my entries. Um, that I don't get confused, because when I get confused, I also tend to get emotional about taking a loss. Because why? I was confused about the trade. I jumped in when I didn't really have a good sense of, this is what I think is going to happen. This is my confidence on that. This is my risk management, all those things. So then when you take a trade where you don't have that, laid out, and you don't have it, really sort of the belief in your system and in what you're doing on that entry, then you take a loss, and then you're annoyed and emotional because you lost money that you really didn't even have to risk, right? Because that's the thing, is if you don't have anything in, then there's no risk, there's no discomfort. There should be no discomfort, because you're just letting the market tell you what side you want to be on, you know, and where the levels are. Let somebody else figure out where the levels are, right? I use the levels sheets for the mathematical stuff, right? But the levels themselves are still just a reflection of whether or not buyers or sellers come in and defend those points. And so, you can either pick them out because they're the big obvious ones, right? Or you can kind of let the market tell you and see, like, up in here, are we going to be able to take out this, this 40 level? If we can, there's sort of, there's still some resistance up through kind of the 45s, right? So if we get up through there and they start exploding through it, then obviously they're running some big buy stops. Does it sustain, or do those just get taken out and then it quickly reverses? Or, so all we have here on the NQ so far is this big doji. Those can be really wonderful setups, except it's a pretty wide range on that doji, right? So it's hard to read. And the YM was down, I think, 6 days in a row or something. So that's one that could put in a nice reversal here. Remember, I only have this ATR box on the YM is centered on the Globex session low. So what if the YM just put in its low for the day? Look at how, that's all that did was take a half of its ATR. Now, if it reverses and it's a turnaround Tuesday and it goes straight back up, it should trade to 53,700. That doesn't do much for it. See how it's been in this downtrend. Getting back up into this 700 level, all it's doing is retesting the low of this kind of range, and some of these lows, there could be some huge resistance up there. Seeing a little bit of buying in the bonds this morning, so that's good. Again, the part that concerns me more is the bond market volatility. These things shouldn't be moving the way they are. Like it's a lot, right? It's significant. These tech names, up 10%, down 10%, up 10%, down 10%. I mean, what is the deal? They all trade like they're Green Mountain coffee roasters or something, this total meme stocks, GameStop, I don't know. Tesla closed its gap. I suppose there's something probably related to SpaceX there. Let's pull up the SpaceX chart. SpaceX got all the way back up to almost 150 again yesterday, now gapping down. It's an interesting one. Let's see what we've got. Not much happening on the ticks. Crude dropping down below its opening price. See if crude has put in its high in the day. It filled the gap and now is rejecting. Let's kind of just pull that up on the bigger screen here. Let's just say the high of the day is in on crude. Again, its ATR is sort of in contraction mode a little bit. So back to a little more normal trading in at $2.86. But it still could put in like a big dropper day kind of thing if Trump is figuring this stuff out in Iran. Maybe it drops back down and the new range could be just mid 70s or something. Got the NQ back down below its open here, so it could reject. It could need to and want to do a real retest of that 50-day. So, but again, it's pretty close. And sometimes what happens is when they get close to these bigger levels or bigger numbers, sometimes they start buying them ahead a little bit. They start nibbling, seeing how that reaction goes. It can still kind of flush through pretty easily enough and cause those buyers to quickly kick it back out. But that again could be the really good flush that we want. for a long side reversal type setup. Okay. These are some decent red numbers as far as Nvidia down 2%, Broadcom 3.3%, MU 4.5%, AMD 4%, Intel 6%, Western Dig 5.75%. What else is on this list? APH, I don't know. Marvel 6.7%, APH minus 5.7%. I don't know what that one is, but AMAX minus 5.7%, Caterpillar minus 3.5%, GEV minus 4%, LRCX minus 6%. So it's a pretty good amount of selling. Amazon minus 1%. Again, there's definitely rotation because the board is still pretty mixed. There's a lot of green as well. So, you know, as long as the cash needs a place to go and they keep sort of doing these rotational things, I guess, you know, that's good in the sense that we aren't really seeing these big market crashes or big risk off days across the board. I think, you know, Danny was just writing about it. It could be setting up for something big like that again, you know. You just get too many, everybody all around the world piling into these same trades. You know, just because you run a hedge fund or whatever, it doesn't mean you get the timing right and the entry right. You can still be right in your theory and everything, but then get started at the wrong time, and just based on positioning, you get shaken out or however it goes. Like you know, occasionally read about some of these guys getting banged up. So here's another low here in the NQ. Another rejection of this 15-minute moving average. You know, that's basically a confirming rejection. You get the early rejection, swoop back down below the open. And again, do they defend this 50-day? So it's right here at tomorrow's projected 50-day. This is what I've been talking about for a while in my room, is that the spread, what's going to give here is the NQ going to break back below its 50-day, and then these other markets really get pulled down with it, or you know, is the breadth showing in the general markets with ES RTY, you know, showing that like, hey, yeah, the AI trade is intact with the rest of the world. Like the more things evolve, the more all of the rest of the world, the smaller companies, get to take advantage of that as well. And so that the market breadth of this rally sort of starts to show that there's a reason why, you know, we're up at these levels, and can then the NQ start to catch up again and make new all-time highs again? And that's what I was showing on that chart that I posted on August 5th, in terms of how the daily chart looks on the NQ, how these things can match and mirror, and their chart pattern. So they, in theory, they're reflecting the behavior of the market participants, and our behavior tends to, tends to repeat, because we see the same things, we do the same things, we react the same way, generally speaking. And so that's what makes the setups viable. So this is still kind of chop world in the ES. NQ is a little smoother here in terms of the 1 minute. Let's take a glance back. We've got a little move to the upside in the VIX. That's again just sort of corresponding to the gap. So do we come back in and close that gap? Is there more to worry about with the Fed minutes tomorrow? I'm not terribly worried about the Fed minutes, I don't know what they might say that would cause any real different feelings compared to what the presser was and all that. Like, I still kind of think, why in the world did they not hike? And everything's great. The economy's great, according to everybody. The numbers are great, according, it's like, why not just hike? So to me, that was like a little bit of a red flag that, what are they worried about, right? And so to me, I'm worried about a recession. I'm worried about stagflation, right? And so they might end up looking like heroes because they didn't hike if there's a recession, an imminent recession, and then they have to cut rates. I don't know. The bond market doesn't really have to react. I mean, our whole world has been based on these fiat currencies for so long, and we've just been, especially after the pandemic, the amount of money we've been printing everywhere around the world is just insane. And so a hyperinflationary kind of move, it could happen. It happens, right? Historically, these things happen. I think one of the best parts about electronic markets in this day and age is they are hyper efficient, though, as well. So, to Warsha's point, letting the markets sort of play out a little bit, I think that's can be a good thing too. Just let the markets price it in how they need to price it in, but then what do we need the Fed for, right? But I don't know, if you haven't read Lynn Alden's book, Broken Money, it's worth a read if you're not. I don't know. For me, it was good, really good. I'm not like any kind of trained economist or anything like that. I didn't go to school for economics or business, or most of the stuff that I talk about is just in relation to markets and how I've seen and experienced markets for all the time I've traded. And um, that was a really good book for me to read because it's more of a, I think it's written well in terms of not being overly complex, and some very interesting sort of history of monies and how that stuff can work. But here we are recapturing the open. So can it close and convert above this? And I like the fact that the bonds are rallying a little bit because I just want them to stabilize, right? If they don't go crazy, then the market can react a little bit. But again, we keep creeping towards these levels that people are watching and talking about. And it's the same thing with the support resistance level and on your trading instrument, right? When a level is really big and obvious, as price approaches that level, people start to step in, right? There's sort of three ways you can trade it. You can trade a level by, say you're looking for a long entry. You can trade a level by buying a little bit above it. You can try to buy precisely at it, or you can try to buy a little bit below it on a stop run, right? What ultimately is the sort of the safest trade? You don't really know until after the fact, but my guess would be, that the safest trade is to buy a little bit in front of it, right? Because if it's truly support and the buyers are coming in, then they really shouldn't take out that level. And so when you're in an uptrend, like on the daily charts, that's why sometimes you'll see an uptrend where the ES will print like within 5 points of its prior day low, but it won't take that out. And that's what I mean. Like, so that can be a great long entry where it's an obvious level. You buy a little bit ahead of it and you have your stop below. And that's why when they break those levels, sometimes they can be violent, right? Because if there's just too much positioning, the break ends up being, very extreme. So my point is, with the bond markets, we can have these levels where, they start creeping up and getting pretty close to, the big level in the 10-year is 5%, right? So that's still a little ways away, but not that far, right? So my point is, as we start to get closer, we should start to see a little profit taking or reversal in it. And if it can just stabilize, then, it might be okay getting through all that stuff. It sets up really interestingly again for the September meeting. And are they going to do anything or not? Are we just going to hear more of the same for more? We're still evaluating and we've got these subcommittees and blah, 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 or committees or whatever, it was not a good, to me, he did not instill confidence. Right. I know there was some hedge fund blow up or something that caused the big sell off. I always find that kind of news fascinating after the fact. Let's see. We've got the YM is sustaining a little bit here. RTY back to its open a little bit. Let's see if it can get back above. We're getting a little bit of a curl here now in the NQ and the ES on the 1 minute chart. Another quick glance across the board. Haven't done too much worse here in advanced declines. They're still minus 200. So they couldn't make a new low. That minus 300 level. Apple's going pretty strongly bid, up 1.25% almost. 310, 309 and a half. Amazon trying to come back a little. If it rejects right here, they could sweep down through the 50-day and really gain some momentum on this to the downside. I didn't realize I had my our trader open. I think I'm going to try one. If we break again below the open, trying one at 26s. So I'm short. I'm bidding 23 on one. And then I've got a 20 bid on a second. Okay, I got filled on one at 23. See if I can get the 20 back. And this is, NQ broke its low here. So let's see if NQ can get down to and through its 50-day moving average. Remember what I said it was, comes in at 594 and a half. So that's a perfect test of the 50-day, but let's see if it holds. My guess is they could really buy it hard, but it can go either way. Looks like I got my 20, so I've got a runner here. My stop is break even at 25.75. And what I'd like to see now is a close on the 1 minute, at new lows, but I want to see it close around around the 14 level, and then what I'd want to do is move my stop to kind of just above these highs, right? Because I don't want it to basically reject this and come back up into this range, because if it's doing that, it could mean that the NQ has reclaimed the 50-day, and then it sets up for a really big, upside push. But we're seeing new lows in NVIDIA. Meta still is sort of eyeing its lows, starting to get some sag again in Tesla. And then, sometimes when they buy Apple, it's a defensive posturing, right? So if you start to see, for the most part, Mag 7 right here is red, and all these tech names are red, and then you get some buying in Apple. To me, that's defensive posturing. It could mean that we open the door here to 7600s, and again, we need to go back and test that breakout level. Do you remember what it was in the NQ? Let's take a look at this on the daily. So the NQ is kind of in this spot here where it still can rally hard off of this, right? Like, this is sort of perfect. If it comes back in and reclaims, if it tests some of these levels, washes out some of these late longs, and then gets really going to the upside, you're getting some buying here in bonds. So again, I like that, right? But are we also returning to sort of a traditional inverse relationship between bonds and equities? So you also have to be careful that if they start buying bonds, it could mean that they start selling equities hard, right? So just going to let this kind of play out. Let's see if we can expand it to the downside or not. The RTY is trying to expand its ATR box here, but its ATR box is fulfilled, right? Again, NQ has expanded through it. And right now, this could be the short entry of the day. If it does not hold and reclaim that 50-day, this could be your spot where you had one little chance to get out, and now they could dump them. I don't know. We don't know until after the fact. When it comes back up into the range like this, it can also be range bound, and they can totally squeeze and take out the opposite side of that range. So it looks like I'm about to get taken out. 25 3/4 is my stop. And I'm flat. Sometimes I do that, and then it trades perfectly, back to my spot, and then it really goes. But I really like this setup for NQ. If this level holds, this could be a monster setup right here. Think of how many people also missed, some of these levels on the Nvidia and the tech side of things. And so any little pullback, in theory, it should get bought like crazy, right? And you can see how valuable as well the tick chart can be for you when you're trying to take advantage of contracted ATR ranges, because when you start getting used to the volatility we've had this summer, and you get these runners that can go like 50, 60, 80 points without sort of blinking an eye. It's like that's not a very sustainable kind of trade, right? Like, yeah, we have those periods like now, but that's why I was getting at with August and the end of August here, like the market and the market participants need a break from this volatility, right? So it's sort of the last part of the summer that people have to go on vacation or to get their kids back ready for school. And so when you get these contracting ranges compared to what you're used to, using the tick chart to exit is a really good way to try to capture those good exit points, right? Like, you basically just got a low tick reading of the day right there at minus 640, and it corresponded perfectly with a little flush and reclaim. And again, it can still flush again and go lower and become a trending day, but from the rejection of this 15-minute bigger moving average, you had it was a 5-minute drop essentially, where it just gave you 14 or 15 points, and then you get a low tick reading of the day. Just buy it, cover at least some of your position there, right? Or just trail your stop. It's tough sometimes when you bring your stop down tight like that. Like if you had stopped it at 21, and then it's tough when it comes back up and shakes you out and then becomes the entry that moves on down. But again, like, you don't know any of this stuff until after the fact. So the it seems to me like the best traders not only have very specific risk management parameters, but they also have very specific profit taking parameters. Because again, it only takes the one trader in the world to come into the market or out of the market with a market order. It just takes one trader to negate your edge, to make the perfect setup go the other way on you. And so it's like there's just no reason. This is why you see when I'm trading poorly and I get all opinionated about stuff, God, it's like after the fact, like, what the hell were you doing? When there's no known outcome here. That's why you have to use stops. And again, it's the news bombs that'll really kill you. But sometimes it's just one trader, like one hedge fund, that today's the day they have to liquidate. you know? Oh, we're closing our doors. Time to throw all this stuff out. It doesn't matter at what price. So sometimes all it takes is the price to move, then it draws in the rest of the world trying to trade the same setups. And so, you know, let's see, we've got a pretty good recovery in Google here. Pretty much closed its gap, is near flat on the day now. Again, I think this 50-day is really important for the NQ. I think that's, if we start to convert this to the upside, then we could have a real big upside day here. The turnaround Tuesday Danny was looking for, maybe. YM is still holding above its open. RTY, NQ, and ES now below. So is crude, though. Crude's below, so if crude starts to come through these levels, then the market should respond to that as well. You're still seeing some buying in bonds, okay? They're on their highs of the day. Let's see. Yep, they're through their overnight. So that's encouraging in my mind. Again, I'm not a pessimistic guy that wants the world to collapse. I do enjoy short side trading. But that doesn't mean I'm rooting against everyone who's long. It doesn't mean I'm rooting against the world or anything like that. I just do find that when you reach some of these overdone points in the market and it gets a little too frothy, it's like, from a risk reward standpoint, just be careful. It's like, sometimes there's times when the only reason to be a buyer is if you're covering your short, right? I'm talking to myself a lot here because it's the times when I get into trouble or when I'm fading, and all that relates to is not waiting for the actual turn at the top or the bottom. The old phrase of catching a falling knife is you're just totally guessing at where the support is going to come in. Instead, the best traders really are good at wading through those panicky moments, and then as they see it start to turn and stabilize, they'll take a shot at it. The reversal patterns are really the best in terms of risk reward. If you get that timing right, and because it leads to the trades that tend to be ones where you have a really good runner, right? So I don't know. 5 more minutes until the close of the hour. That's kind of a big deal. What a lot of people watch is the first hour's range, and they'll look for an entry either breaking out of the range or a breakout of the range with a pullback to sort of the 50% of the range. Everything's going bid here right now. Amazon, Google, looks like Nvidia, Meta. I don't expect Meta to do much. Sort of seems like it's got quite a bit of news and headwind, or headwinds in front of it, but yeah, to pull up the Google chart, this is pretty nice upside move right here. Let's see if it can expand on it. You know how many stops are above. These are, good cascading stops up above on the NQ. I mean, this could go, it could go pretty face ripper. And these tests of the 50-day are often really, really big spots for the big boys. So if they come in and start really buying this thing, I just wanted to pull up whatever this morning's new data was on like housing, employment stuff. Let's see. Building permits. Yeah, finally a better number, right? Building permits up 5% month over month. But housing starts down 12.4% month over month. Pending home sales. Month over month and year over year, both down about 2.2, 2.3%. It's not great. So we'll see our mortgage applications tomorrow morning, crude inventories tomorrow, 20-year bond auction tomorrow, Fed minutes. Thursday, jobless claims, Philly Fed. $30-year tips auction, that could be interesting on Thursday. And Thursday evening, some inflation data out of Japan, that could be interesting. All right, so looks like they're going to try to hold this. NQ needs to get up through its open. Bonds are still bid. Getting some upticks here. This is our hourly range is put in. Let's take a look at our level sheets again. So the 23.5 level was S2 on the ES. We've got S1 up at 44.5, so that could be an easy one to test. I think this could be a pretty easy gap fill. It's not behaving the way most of the gap fill rallies have behaved, right? Think about that for a little bit, because oftentimes when we have these gaps, they just open them and buy the shit out of them and face rip them straight out of the gate. So this one's a little bit interesting that we haven't seen that yet, but maybe just getting through the first hour here, maybe the NQ just really needed to go down and test that 50-day first. Apple new high, Google on its high, Amazon eyeing highs. It looks like Nvidia and Tesla are gone bid again, but see how they follow through if they do. NQ has let's see, a level here. Next level is looks like around 29,820 is the weekly S1. Then 870 is S2, and 974 is S1, and the 5-day moving average is 980. Crude is breaking down again a little. I would expect it to flush the bottom of the range. So I'm looking a little more eagerly here to try and take a long. I could be a little slow here to not already be in it, right? Because that was a pretty nice retest of the open right there. And you've got, some decent sort of long side structure coming in with all of these buy stops above. I don't know. What are you guys feeling? Any questions for me or comments? You guys all long, short, standing aside? Have you been trading a little better, Philly D? All right. Red 1Z, ready Z. Yeah, well, I mean, oil could just hold this range too, right? And if we're in a range bound trade, I don't mind being short right in here. You've got a pretty good stop level. Those levels are sometimes the obvious trades are just the ones you have to make, right? Because they're obvious, so they're scary. You feel like you're just for sure going to get stopped out, but then if it works, then it can become really the best entry. I mean, this could be a pullback like we were showing on the daily chart, right? This could be the pullback in an uptrend. This was sort of a shallow pullback to begin with. So if they really maybe they need to still test that 76.50 level, but if they can hold them here, I like the way NQ sets up a lot more, like I was saying. But then when you go to the 15, these are, it's pretty good. It's a pretty good structure to the downside, right? I mean, gee, you know, these touches, when they reject that 15-minute moving average, the next wave could be, and it's hard to count when they do a lot of this stuff in the overnight. I feel like it's hard to count, right? Because there's not a lot of volume. You don't know if it's just sort of manipulation a little more because of the overnights. But if you are counting this, you could say, here's our wave one, wave two. I mean, really, this almost becomes one big wave three. Maybe this is wave four, and we get another big wave five, which could be, maybe it's 60 or 80 handles. That would bring us right back down to 76.50 level. Let's look at it on a 60. There's kind of that air pocket down through there to get back to that breakout point. It should get tested, but if it doesn't, then this can become a pretty strong kind of recapture. And God, I mean, what a rally that was. And to sort of expect that rally is going to see another measured move to the upside, like, it seems ridiculous for me to say that that's sort of a possibility, but man, the way these things have gone. And I looked at it from the NQ's perspective that's kind of how this thing could set up. There's just so much cash out there. I don't know. Amazon has gone green on the day, getting a little pullback in Google. See if it can hold this 341 level. Apple still on its highs. So for me right now, the structure is a little more long bias because I'm above the open. I have an upsloping 1 minute moving average here. 15 is still kind of sloping downwards, but if it's a reversal signal, then that sort of the 15-minute is flattening out. But when you flip it over to the NQ side, NQ's below its open. It now has the 1 minute sort of rejecting, looking like a reversal signal, if it comes back like this, and also rejecting this 15-minute sloping moving average again. YM held its open again, so it's kind of attempting that upside thrust. We had the advanced declines just made a slight no, it didn't make a new low, but it tested the low pretty well. Now let's see if it holds and tries to move back to sort of flat on the day. Pretty big rejection there in the RTY of the opening print. And eyeing lows there, so you could have a continuation to the downside on this. And the tech names, it's pretty red, except for Apple. Meta just made a new low. Let's see if it continues. And this is a decent rejection right here of that 15-minute moving average again. We've got a minute and a half left until the close of this 15-minute candle. So instead of trying to jump in right here, I'm going to wait and see where they close this candle on the ES. Could mean I've missed a really good entry here, but we're just right in the middle, hugging the open. It's sort of hard to know what to do. Thank you, Stuart. New low in RTY. I mean, to me, the higher interest rates could be a really big factor for small caps and any of the tech stuff. Again, like, where are the over leverage points? It's sort of strange to hear and see things like, that NVIDIA is out there buying, SpaceX stock, and I don't know how that stuff really works, but so now you have NVIDIA out there as a lender, and then they're buying stocks of other tech companies, and I mean, how much of this house of cards could get kind of ripped out from under our feet? Oftentimes, like, really, it's that sixth or seventh thing that comes along, and then in hindsight, everyone, oh yeah, that was so obvious. All right, so we had a red close on that candle, and there are some wicks here, but it seems to be quite a lot of wicks or rejections up on the high side. NQ still seems like the smoother chart for the day. But remember what I said about NQ's projected 50-day. So if you're factoring the slope of it, tomorrow's 50-day would come in right here at 614. So this is pretty important in my mind, because if this little level holds here, it doesn't have to be perfect, but if it holds here, then we could start seeing that this looks like an inverse head and shoulders with a matching low here, matching low here. It holds the 50-day, and they start targeting the buy stops. It could also reject hard. But because bonds are still rallying a little, I mean, my thought was that the selling yesterday and in the overnight was based on the bond markets, and that these rates are getting to be, just too much of a problem. But, then you get a couple numbers and they're okay, and and then the bond market starts rallying a little, and then, it could just be the sort of extra stability we need here. But your short is looking better there, Reddies. I mean, for me now, I don't, if I'm short, I'm still flat now. So it's sort of like I could try this as a short back at the open. I could try it now that the 1 minute moving average is starting to slope down. I could try it there at the 27s. Like, that's not bad, because sometimes you'll get some stops above the open, and sometimes they'll run them just a little bit through, and then they start selling them. They trap everyone again. Yep, agreed. But you're getting a divergent kind of look at, out of the YM and the advanced declines here. See if the advanced declines start going to the upside. Nvidia looks like it's eyeing lows again. So that's the other one that if Nvidia breaks, let's take a look at the single stock chart on that. I mean, it's kind of in no man's land, but I also feel like there's probably a good chance that it could actually break back down and fill that gap at 212 or whatever. So that's kind of, for me, that's kind of one thing we want to be seeing, it is if Nvidia starts looking like it wants to do that, then I think your short could be real good there. I always used to use the advanced declines as a nice indicator for days to sort of avoid, or for days to try to stay out of the chop. When they're just kind of flat like they are, it tends to be just choppy, range bound, basically balanced price action, right? And it's always hard, I think, to go back and forth from figuring out, are we going to have a trending day or a range bound trade day? Because, you can trade them quite a lot differently. And it's a skill that's really, really good if you can develop it, trying to figure out how to adapt a little and trade more for a range bound day. I like the concept of, everyone always talks about don't short a dull market, and and you know, that sort of thing. But I mean, also August hasn't generally been this strong, right? So it just everything about these setups right now are it's tricky. Um, but what I'm kind of getting at is when you're trying to trade a range bound type of entry, what Dad and I always talked about is that ideally, if you had, I don't know where you're short from, but ideally, if you had the short entry from near the top of the range, that's a really cool way to look at it and do it, right? Because then ideally you can cover half at like the midpoint of the range, you cover another, or a third rather, you cover another third at the low point of the range. And usually it's just going to hold the range and it'll keep chopping around. But if you get that overall direction correct, then hopefully it breaks down and your range, what was maybe originally a range bound entry, becomes a trend trading runner, right? That's the idea. There's some kind of news, it looks like. I'll see if I can jump in on one with you here. I'm going to offer 24 3/4 with a 4-point stop. 28 3/4. It might not be aggressive enough. I don't want to chase because if NQ holds, could reverse pretty hard. So I'm kind of trying to be a little more diligent and patient, take my normal kind of setup, right? Like now this is rejected. We have a down sloping 1 minute below the low. It shouldn't really go back above the open again, right? So by seeing if I can get a 24 3/4, it gives me a good easy stop up here. And for the most part, it looks like I'm going to miss it and it's just going to go without me. But if it's also a range bound day and rotational kind of trade, you could see YM start to break the open, and you could see them start to come in and buy the NQs and ES. You're seeing a little bit of rollover and selling in bonds. Nvidia eyeing lows. Meta starting to go bid a little bit. Apple and Amazon still near their highs. Yeah, oil held that held that level perfectly, didn't it? Pretty much. See, the low was 83.78, and this low from last night was 83.77. And the pivot on crude is 83.80. Algo math, I'm telling you. Not much follow through so far in the ES, but you are starting to see a little bit of this selling pressure here in the bond markets again. New low in the advanced declines. This could be the right spot to be getting short right here. I canceled my 24 3/4. I'm trying to pull up my trader platform here. I just want to make sure I'm getting the right accounts pulled up. Let's see. Okay. I'm going to try one right in here somewhere, I think. It's a little tough because it's a reclaim. Med is starting to go bid now a little bit. I think I might try one long instead here because we've reclaimed, this could be a spot where they trap the shorts, but let's see, what was the level? 23.5 is S2. So I want to see it reclaim and hold that in the ES. Could also just be the spot where it rejects. I'm going to try one if I can. Well, kind of like it 20 1/4. And just add to it if it goes my way. And I want to be adding at a point where they come in and take this upside liquidity. It may not happen. Could go the other way. But there's some fuel here on the NQ if it does decide to try to threaten back up towards the open. So it's like if they start taking this, I want to be selling into it. So maybe again, like a retest of this 15-minute moving average. So say 28.25, and then the highs of the range 32.25. Looks like I'm going to get stopped out and we're going lower again, but I think I might try one more in here. NQ looking a little weak. Sort of looks like it's going to go breaking to the downside now. Fuck. Okay, Bosch. I'm going to try it, see if it goes the other way now. Oh, should have stayed with my original thought. Right now I'm kind of in no man's land. That was stupid. Do have new lows in the advanced declines. Adding another one there. This is what happens when they rotate them, though. You know, they take YM and RTY down. They could start buying ES and NQ easily enough. Let's see. See what happens. I got 2 on. I'm looking to add a couple more if it breaks. try to get one at 09 and 04. See if it can run some stops down through the 7,700 figure. Sort of a straight line drop here in the advanced decline. So see if this causes some follow through. This is either the spot to sell or they're going to hold it and face rip me. So I didn't have my full stop in there, so that's all right. Looks like they're going to face rip me, but yep, advanced declines, new lows again. So we'll see if that's meaningful at all. It doesn't necessarily mean anything, but YM has been this sort of weak downtrend kind of thing, and now, you know, breaking the open here, you've got, it's kind of looking ugly on the RTY, but again, it could just be rotational where you start buying NQ again and ES. So I've got to respect my stop here, because it could really, just positioning wise, there's a 15-minute doji here in NQ, and those can often be huge, awesome reversal signals. They can also be continuation signals. But I'm below the open, downsloping 1 minute, downsloping 15. So my short entry here is reasonable in terms of it's following my system, and see if we get any follow through. So I've got a one lot to add at 16 on a sell stop, and a one lot to add at 14 on a sell stop. And then I'm just moving my stops down. I want the liquidity to sweep and to be with that liquidity. So it's a tight stop, because if it goes the other way, it could just trap everybody short, right? Here's a 200 lot that looks like it wants to hold, but if it doesn't hold, then I want the liquidity to come right through, sweep me, and then fill me, you know, sort of in the same breath. Kind of doesn't feel like it's going to happen, but There's the 15-minute doji is really the thing that I have to worry about with the NQ, because Nvidia is holding now. This could just go the other way. Yep. Yeah. Try it again here. Okay, keep going. Being a little stubborn here. On the 1-minute chart, sometimes the doji can be a great continuation pattern. Could still be a reversal pattern. We have oil back above its open. So sometimes that 1-minute doji, what they do is they take the high out and then they take the low out. So now I want to see if it sweeps. Down to minus 500, minus 520 on the advanced declines now. NQ going the other way. All right. That account is locked out. Let's see. Now I have to remember what it counts. Here we go. $3,598. Here's 1,3,598. All right, so I'm going to try one here. Looks like NQ wants to rip, but it could be false. Advanced decline still making a new low here. There's that 15-minute doji signal is my problem that I really don't like. Time is at 9:25. Feels like they're going to hold them. All right. Rotate. These are evals I'm trading here. Right back into that 50-day. Grr. It's the reclaim in that 50-day. This thing could absolutely explode to the upside. Now I'm just being stubborn, taking stops on all these accounts. See here. These are all evals except for my dormant account. 180. Okay. Advanced declines are eyeing lows again. Yeah, this is really a reversal signal for me. I don't know. I keep trying this short trade, but they held that low pretty well. So the question is, will they actually sweep it now? Like, just like you're saying, crude on the upswing here held its low perfectly. So if we take our 15-minute chart and move our ATR box, if the low of the crude is in, then just fulfilling its ATR gets it back to 86.65 or so, which is a big gap technically that didn't really fill, because on this candle it printed at this high at 86.79. So even though this is gap that sort of looks like the gap on the chart, the fact that it closed up here and then opened right way down there, so we'll see if crude goes straight through, and we have a chance at this being another rejection here. And what I'm really worried about now is if that's all the bonds can rally and then the bonds start selling off some. So I got this last one at 20 1/4. I've got 15 1/4 bid on one, 10 1/4 bid on a second. I'm short 3. Advanced declines making another new low here. Market so far doesn't care because I'm, the NQ trade 5, 94.5 is that 50-day. So it rejected it again here. So if NQ does start to lose this support level, right? This was resistance. It became support. Now if they test it again and it doesn't hold, that's when it could get a little gnarly because of the 50-day moving average and the rejection thereof. See if we can get some more down ticks. We did get to minus 850 down ticks there. Still acting okay. If NQ sweeps this support level, then I should get that 15.25 pretty easily. See if NVIDIA can hold its level or if NVIDIA wants to close its gap down to 212.5 today. Too stubborn. Had the chance to take it off with some green. Still feels kind of bid here. All right, last try. Nice live action. I think you got a great trade because of this 50-day. I'm trying it one more time if it comes back down through this 23 level. I mean, I'd honestly like it at 26 and a quarter at the open. Could be a really quick stop on this one. At least those other trades I had a little bit of a chance. So this could just go right through me. And then that's probably about it for me and my live action presenting. I mean, jeez. Let's see how this lines up with the downsloping 15-minute moving average. Sometimes it can reject really hard there. The problem I don't like is that the NQ rallied off that 15-minute doji, held the 50-day moving average. I mean, the thing is, the 7,700 level, it's hard to not think that the market won't go back down and test that at some point. It could go a lot higher first, you know? So I got one at 20, I got 3 at 22 and 3/4. I'm adding at 20 and 3/4. Oops. Oh no, I just added 3 more. Okay, well, all right, 21 and 3/4. Let's see if I can get a couple back at 18 and 3/4 and a couple back at 15 and 3/4. Probably just be done. All right. Well, either way, I got to take a break. So I'm going to leave it there, you guys. I hope you all had a better day than me, but at least I followed my risk parameters, used my risk management tools. Those are just had one good trade in my personal account, and then several stop outs on my evals using just a $300 limit, stop limit. It doesn't leave you any room. That's the problem. That's so it goes. You guys have a great afternoon. If anyone ever wants to reach out to me, just feel free. And always here to try and help if I can. You know, sometimes you just fade what I'm doing and you can make some good trades. So that's that's the tough part about being on the live stream. You know, it's sort of hanging it out there for you guys. You see the good and the bad. But, you know, that's why I like, just sort of final point, that's why I like taking some trades. Like what I should be doing, and it might be a good rule to try, is that whenever I get stopped out, try the other way. Not necessarily like a stop and reverse, because I think those are sort of the wrong type of entry to use. But if you get stopped out short on your next trade, maybe try it on the long side and just try to get a sense for what that order flow feels like. And if it starts feeling easier to trade on the long side, then you probably have the direction right, you know? So kind of that's my final tidbit for the day. We'll let you guys go and be back at you. Well, I'll be back in my room, of course, today and then tomorrow and stuff, but back here again on next Tuesday. I think. Oh, actually, next week I'm going out to Maine on vacation, so I might not be around next week. I'll kind of figure that out with the rest of the Pitbull guys and see what we're going to do there. But all right, guys, appreciate it. Cheers.